Market conditions remaining mildly bearish in this bull market, which essentially means trading or considering the bearish to neutral bias, raising stop levels on winners and selling any losers that you may have in the portfolio. Bond market, or excuse me, the bull market rank is sitting at 25.34, which is this number, as we've mentioned often. That's a very elevated number. We're well into this trend and now just dealing with the upper end of this range currently. We're seeing some retracement pullback in momentum, also seeing pullback in breadth, and a little bit of fear coming back into the marketplace here with this sentiment indicator pulling off of those extreme areas. A buy-sell ratio also giving us a negative bias or a bearish bias, 0.47. Now bears gaining some acceleration to the downside. We saw that on really across the board on all indices. S&P 500 breaking down below the momentum zone here, that 548 number. We talked about that. If it were to break, it could be a quick trip back down to the 382, 537, and it did it all in just about one day right here. So pretty significant shift to the downside across the board. We're watching now for any kind of a bounce or support here at this 537 area, but definitely more of a bearish bias at these levels. We also saw Dow, which had really been strong right here relatively to some of the other indices at 407, at least on the DIA, pulling back into that corrective zone. Remember, once we pull back through this momentum zone, we enter into a corrective or counter trend zone. So we can still be in a bullish uptrend and still be watching for some support areas inside of this zone right here. But for Dow, that 401 range, it could be another 300 or 400 points to the downside on Dow before finding some real significant support. Also, remember, when we start to see the trend structure start to look like this, we are at that location where that's part of the reason why we are mildly bearish is we could start to go either direction now, but bears gaining some acceleration right here. Also on technology, the triple Qs really showing some weakness, also breaking down another area here, that 50% area on the most recent uptrend, and so we're now down deep into that 618 support area on technology. That just creates more work to the upside, more work, and so markets have got to do some work here to really gain some bullish footing back to the upside. Also seeing some weakness here really across the board in sectors now where we're only have 3 in uptrends. The bulk now shorter term downtrends. It can happen quickly, and it has happened pretty quickly right here on the just a market retracement. Commodities, seeing gold still holding that upper range, holding that 228 support range. A little bit of weakness on that pattern on Friday. And silver, similar pattern. That has been tracking gold relatively closely, just a little bit deeper in the counter trend location. USO, which has really been weak and continuing to get weaker, had a little bit of a bottoming tail bar right there around that 68.50 level. We talked about that once we break through this level, and it really could be a quick shot, or at least starting to see some chop and some churn and some demand starting to happen at these levels. We'll see if that starts to happen here on USO. Muscle Stock Group, seeing some strength in builders. AGX, a big gap higher, probably on an earnings report here. Big volume, big increase on AGX. And RYTM, pharmaceutical stock, nice looking tight pattern, needs a little momentum to break back up above that 49.64 area, possibility there. And also DR Horton, which is another home builder, and that has been pulling back or working on trying to find some support inside of that 179, 180 range. Some things for you to consider for today, and that'll do it for today's update. Thanks, everyone. Have a fantastic day today.